Assalamualaikum and a very good day everyone. My name is Atika Suraya. Welcome to Tax Talk with Group 1, the short podcast where we break down one of the most important civic duties in Malaysia, paying your taxes honestly and correctly. Join us from the tax world. Thank you for joining the podcast. Let me introduce our tax officers, Ms. Izzah and Ms. Sufia. Have you ever wondered what does it actually mean to be tax compliant? Or what happens when someone decides to hide their income? Today, we will answer those questions step by step. Ms. Izzah, let's begin with the basics. What exactly is tax compliance?
Tax compliance, in easy word, refers to the responsibility of taxpayer, either individual or an entity, to follow tax law and regulations set by the Malaysian government. These include registering as a taxpayer, declaring income accurately, submitting tax return on time, keeping proper records, and paying the correct amount of tax. In Malaysia, these responsibilities are administered by LHDN under the Income Tax 1967.
From my understanding, there are two types of compliance. Can you explain the difference?
Yes, there are two types of compliance, which is voluntary compliance and enforced compliance. Voluntary compliance happens when taxpayers willingly fulfill their tax obligation without any enforcement action from LHDN. Malaysia uses a self-assessment system, which means taxpayers are trusted to calculate and report their tax honestly on their own. For example, if a person submits their tax return before the deadline and declare all of their income correctly, that is considered voluntary compliance. On the other hand, enforced compliance happens when taxpayers fail to comply voluntarily. In such cases, LHDN may take action such as conducting tax audit, investigation, imposing penalties, or even legal action to ensure compliance with tax law.
That is a really important distinction. Okay then, so in simple terms, what actually makes someone a compliant taxpayer under Malaysian law?
Being compliant means a taxpayer has fulfilled all legal obligations under Malaysian tax law. A compliant taxpayer reports income accurately, pays taxes on time, maintains proper documentation, and cooperates with LHDN when required. Failure to comply may result in penalties, additional tax assessment, or even investigation. So, compliance is not just about paying tax, but also about following the correct procedure required by law.
Now let's hear from Ms. Sufia. Why should every Malaysian care about tax compliance?
The answer is very simple. Government services run on tax revenue. Every ringgit collected by LHDN goes back into the country to build schools and hospitals, to pay for public transport, to fund the civil service, to finance national defense, and to support social welfare programs like PRIM or Sumbangan Rahmah. When individuals and businesses hide income or avoid taxes, the government collects less revenue. This creates a budget deficit, and when there's a deficit, the government either cuts or borrows more money, both of which hurt ordinary Malaysians.
That sounds very serious. What are the consequences for someone who does not comply?
It's very serious indeed. Under the Income Tax Act 1967, failing to file a return on time carries a fine of up to 2,000 ringgit or imprisonment. Submitting a false return can attract a fine of up to 20,000 ringgit, imprisonment of up to 3 years, or both, plus a special penalty of 100% of the tax undercharged. LHDN also has the power to conduct field audits, desk audits, and full investigations. And if you owe back taxes, LHDN can take legal action to recover the debt.
So, the cost of non-compliance is far higher than the cost of simply paying your taxes. Thank you, Ms. Sufia. That is a very clear picture. Now, for the most important part of our podcast, let's talk about what to do when you face an ethical dilemma involving tax. Ms. Izzah, set the scene for us.
Okay, so basically the scene is about a business owner asking her accountant friend to help manipulate her tax to reduce the amount of tax payable. This is a common issue often discussed in Malaysia, especially regarding unethical business practices and tax evasion.
Oh, I see that there has so many taxes in my business. I should take advice from my friend Mariam. Mariam!
Hi, good afternoon. Excuse me, why are you screaming? You know I'm currently working, right? Okay, I see. Alright then, come to my office today, 5:30 p.m. Okay, bye.
Assalamu alaikum,
Alaikum salam.
Mariam. How are
Have
you?
a sit.
How are you?
I'm good, alhamdulillah.
You know, Mariam, there is so many things happened in my business. I have a lot of taxes. I cannot understand how can I manage it. How can I manipulate the taxes so that I have to pay less taxes? Can you please give me some advice about this?
Well, Yasmin, I understand the pressure of running a business, and I'm sure that it's not something easy. But I truly cannot help you hide your income, and I strongly advise you not to do it either. Do you know why?
Why?
Because what you are describing is a tax evasion, which is a criminal offense under Section 114 of the Income Tax 1967.
But the money is cash. LSDN cannot track it, right?
This is called misconsumption. LHDN, they use something called indirect method to detect the hidden income, such as comparing your lifestyle, your bank deposit, and also your reported income. If they find a discrepancy, they will audit you. And if they find that 60,000 ringgit during an audit, you will face a penalty. And I'm too sure that you don't want to face this. Plus potential criminal charges. And believe me, Yasmin, all this risk is not worth it.
So what should I do now?
If I would give you an advice, I would tell you that you should declare the 180,000. Your actual taxable income after the deduction and the reliefs may be much lower than you think. There are legitimate tax reliefs available to you for business expenses, capital allowances, and also personal reliefs. Wait, let me compute the figure. An honest feeling is far better than audit later.
Mariam, you're taking it so seriously. I think I came to the wrong person. Are you really my friend?
Wait. If I'm not the right person, I'll take you to the right person who is IRB. So this is the IRB office, okay? Let's go in.
Miss, may I know, is this the IRB office?
Ah, yes, I'm the IRB officer. May I help you?
Is this true that the IRB or LHD can detect tax evasion?
Yes, you're right. We can track those who evade tax.
Lembaga Sedaran Negara Malaysia or LHDN, or also known as the IRB, uses several methods to detect tax evasion. One common method is data matching, where they compare information from banks, employers, EPF, companies, and other agencies with the taxpayers submitted tax return. They also monitor PCD and salary records because employers are required to submit employee income details. If someone hides employment income, LHDN may detect the difference. In addition, LHDN conducts business audits by checking invoices, receipts, bank statements, and accounting records to identify undeclared income or fake expenses. Suspicious or unusually large bank transactions may also trigger investigations if they do not match the person's declared income. Besides that, LHDN can compare information from property ownership, vehicle registrations, and even e-commerce activities. They may also look at a person's lifestyle, such as owning luxury cars or expensive properties, despite reporting low income. Overall, LHDN tracks tax evasion through audits, financial monitoring, and comparing declared income with actual financial activities.
Oh my god!
I told you.
I'm sorry, Mariam. I couldn't believe you.